Hello, everyone. Happy Sunday. This is Simon with AvaTrade. Welcome to our weekly webinar, Mapping Out Your Week Ahead. And as the title clearly says, what we're trying to do here is actually creating a plan for the week. As traders like to say, you plan your trade and then you trade your plan. This way, we could have more organized and possibly even better results in our trading. Few things about myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade. I've been involved with trading close to 25 years now. I started as a prop trader in New York City, and then after 11 years of prop trading, I moved into, I like to call it, less stressful environment. And I also started to mentor and educate others. And I'm very happy I have this great opportunity to be assisting our customers at AvaTrade. The agenda of the webinar. As usual, we'll talk about indices, stocks, commodities, Forex. We'll look at some fundamentals. We'll take a look what happened last week as far as announcements and events. We'll look into the upcoming week. We'll go through economic calendar. We'll go through a few instruments. I have about 18 winners and losers for this past week, something that we'll take a look at and see how they will proceed the upcoming week. Risk warning, everything we do here, of course, is for educational purposes only, and we do not suggest any trades. You can find a full statement at avatrade.com website. Social media, of course, please feel free to follow us at Twitter, which is X now. You have Telegram, and as I always say, my favorite YouTube channel, where you have a great collection of materials. You have educational materials, you have tutorials, you have webinars. All the webinars that we do are being recorded and posted on YouTube, so please subscribe, click on the bell, and you'll be notified when new things are coming up. Okay, so as usual, a few slides I prepared. These are articles from Barron's. You can find them and go through them. As you know, we are in the era of President Trump, and it's all about tariffs. And he actually said it, I think, last week, one of the speeches that he made, that tariffs is one of his favorite words after country, family, and other things. So we know it's all about tariffs, and it says right here, Trump is engineering a global paradigm shift. It doesn't favor US markets. And it says right here something that's really shocking. In a matter of few chaotic weeks, President Donald Trump has begun to fashion a new world economic order. What it will ultimately mean to investors isn't clear, but the forces driving the equity, bond, currency, and commodity markets will change in ways that can't yet be predicted. So here's the shocking one. So far, the main effect has been a 3 trillion reduction in the value of the US stocks since the January 20th inauguration. The only rational response for investors is to stay liquid and agile. Interesting. $3 trillion. That's a huge amount of money. Another articles right here is actually, we kind of used to it, the threat of a shutdown and so on. So this time maybe it could be serious, but every time we say it and then they just pass it and nothing happens. But it says right here, a government shutdown could create short-term volatility, but it's mostly noise, right? And it says right here, unless Congress passes a stopgap spending bill by midnight of March 14, the government could shut down. That may create even more chaos in Washington at the time when massive job and funding cuts by Trump and Elon Musk's Department of Government Efficiency, or DOGE, are already raising concerns about their potential negative impact on economy. What does it mean for investors? Probably more volatility in the short term, but the good news, based on what has happened to stocks during prior shutdowns, is that the market tends to get over worries about temporary closures. in the government pretty quickly. All right, so that's also for this week. So as you could see, it'll be an interesting week, as it has been, right? Another one here, investors are in bad mood. This time they might be right. It says right here, let's read it together. Friday rally can't hide the fact that the stock market is stuck in an ominous pattern, and it's not clear that we'll shake it out. Indices notched the worst weekly performance in months as markets were whipsaved on tariff news. The S&P 500 rose 0.6% on Friday, but fell 3.1% on the week. Its worst weekly showing since September. It's now down 1.9% for the year. The Dow Jones Industrial Average fell 2.4%, and Nasdaq Composite dropped 3.5% for the week. The biggest problem is uncertain federal policy, which appears to be causing many businesses to hold off on making investment decisions. President Donald Trump imposed tariffs of Canada, Mexico, and China before backtracking on some of the penalties and then promised even more to come. Interesting. So it's all about tariffs, right? The favorite T word. Now, speaking of Fed's policies, we have upcoming meeting on the 19th, and it has been a little bit of increase of possibility or probability of another cut. So one month ago, it was 8% probability. 1 day ago, or on the 7th, it was 2%, and now it's 12% probability. But here's the interesting point. For the next meeting, after the March one, May 7th, it's been a significant increase for the interest cut. And it says right here, a month ago, it was 24.6 probability, then went 31.1, then it was 36.2. And in the past couple of days, it actually increased by 10%. So as of now, it's almost 50-50 that we might see that interest rate cut in May 7th meeting. So it's 46.6% as of now. Now you can track it. You can just Google CME Fed tools, and you can just see it yourself and track the changes in this probability of the Fed. Now let's go through economic calendar really quick. I'll just share what it is for new people that are not familiar. This is public information. It's available on our web trader or the app. You can also Google it. There's a lot of providers that you can get these numbers from. So here I take out only high impact events. As you can see, it's in red. There's so much more you can find and filter through it. And of course, there's no question that if you are a trader would like to succeed, you need to be aware of certain things. What you do with that, it's totally up to you. Some people like to trade events. Some people stay away and wait till things settle. But we all probably, not probably, definitely should know of these events before they come, so we'll be prepared and not caught off guard. So Sunday, which today we have CPI numbers from China. Monday, we have GDP numbers from Japan. Wednesday, President Lagarde speaking, and then we have important inflation numbers. CPI numbers are coming from US. That's a Wednesday. Interest rate decision from Canada, also very interesting. We should be watching Canadian dollar. PPI numbers on Thursday, which also affects decisions of Feds, their interest rate decision process. Friday, we have a CPI from Germany and Michigan Consumer Sentiment Index from US. So again, there's more events. What I take here is only high impact events. Okay, now winners and losers. As I promised, we have about 18 of them. So left side commodities, here is the FX. So we'll go one by one when we get to the charts, but let's just go through them really quick. You can take a screenshot if you'd like. Natural gas almost 15% higher. Palladium almost 5%. Silver 4.5% higher. Coffee almost 4%. Copper up 3.6%. Platinum up 3.3%. On the downside in commodities, we had the big drop in cocoa, 9.4%. Gasoline dropped more than 5%. Crude oil down 3.8%. Sugar down 1%. So that's commodity. And in Forex, on the upside, Euro had a huge move to the upside, 4.4% for the week. Pound 2.66, Euro GBP 1.67. Looks like Euro was a champion for the week, right? Higher than pound as well. New Zealand dollar up 2%, Australian 1.63. On the downside, I had a big drop in dollar Swiss, down 2.5%. Dollar yen 1.7% lower, and USD CAD down 0.67%. So these are the winners and the losers for the week. Okay, let's open the chart and we'll go through some instruments. Now, important to mention, we had the NFP data, which showed a little bit less jobs than expected. We got 151,000 jobs added. Expectation was 160,000. So that shows a little bit less. Also, we had a little bit uptick in unemployment, up to 4.1 from 4%. So it has ticked up a little bit. Still, it shows that employment is still showing a healthy state. Now, we'll go through indices first. And before that, it's important to mention something. I just pull it out from Dow Jones market data. And according to Dow Jones market data, it says the S&Ps and NASDAQ have recorded the largest 3-week percentage decline since the fall of 2022. Interesting. Okay, China. We had we are trading about the 50-day moving average here and sitting right on 100 moving average right here. So that's on China. As we know, as we usually mention, copper, oil, Australian and New Zealand dollar, they all move with China. So copper actually had a nice move here on Wednesday and Thursday. Will give away a little bit. Crude oil has been weak. Just Friday ticked up a little bit. And Australian and New Zealand dollar, both as we know, went up. We'll go through them when we get to the currencies. So US indices, S&P 500. Let's take a look what they say. 3 weeks. Yeah, it's true. That was a big drop. 1, 2, 3. And this past week was the biggest drop. So we went from 61.60 to 57. I mean, the range was large, then we returned a little bit. Okay, so S&Ps. We are below the 200 moving average here. We dropped below the previous support. It looks like it's pointing down clearly, right? NASDAQ, same story. 3 consecutive weeks. Now, we all know sometimes when we see 3 bars, we might see reversals. You could see here, similar story we had back in July, 1, 2, 3, and then we went higher. Everything is possible, right? But it looks like the 3 consecutive weeks could be followed by some kind of recovery or not. Okay, so NASDAQ, the same thing with trading below the previous support, and it's just pointing down as well. Dow Jones sitting right on 200 moving average here. Now, unlike NASDAQ and S&Ps, we're actually still holding this support here from January 13th. As you could see here, we're clearly below on both NASDAQ and S&Ps. So Dow Jones looks a little bit strong out of 3. Now, German DAX has been on the run. We had this move on the 3rd of March, then we had correction, and then there was announcement they're spending a lot of money for military and weapons and army and everything else. So it looked like it gave a little bit of boost. We made on Thursday briefly all-time high, and as of now, it looks like this current level is showing a little bit of resistance here. So definitely we'll be watching German DAX the upcoming week. The FTSE, it was a sell-off on Thursday and Friday. We had a nice recovery, almost covering that loss for the previous day. So that's indices. Again, German DAX super strong. FTSE had a nice recovery, and all the US indices are looking down for the week. Let's move to individual stocks. We'll go through the big boys first, see how they look. Netflix, huge dive, came to the support level and bounced. Meta, same thing, testing that previous support and bouncing on Friday. Google has been strong. I mean, it's been weak, but for the past few days, it didn't go lower. So it could be that this current level is holding for Google. Apple, trading at 239. Friday, we had a nice recovery, recovering the 3 previous days. Tesla doesn't look so great, but it could be good news. We closed this gap from November 5th. Let's see how we play from here. We are below the 200 moving average here. Huge drop from Tesla from the highs, almost 50%, right? Back in December, we're close to 500, and we're trading now. We're actually at 250 on Friday before recovering a little bit. Microsoft, it's been weak, but here shows a little bit sign of recovery. You look left, we had this support level here. So it looks like we're holding that area around 385. Let's take a look at Teva. We mentioned Teva for possible short-term actions or investing. It did break below this previous support. It looks like it. Let's see how this week will play. Now, banks, if you remember a few weeks back, we spoke about banks. We said they were at the highs, pushing the market higher. And then we mentioned if the banks start sliding, probably cause the market to move lower as well. Take a quick look here, the weekly chart. We are at the previous support daily. There's a big fall here with the gap. So it looks like here in the Goldman, we're holding the previous support here from 18th of December. JP Morgan, similar story. But the banks are or have been selling, right? As you could see here. Let's see if they're holding this support. And in general, we'll see what the market is doing. And the tricky part is this total uncertainty with Trump impulsive actions. We don't really know what's in his mind. He announces tariffs, then he puts it on hold, then he resumes it, then he threatens more. And that's, as I mentioned a few times already, uncertainty is the biggest enemy of the market. Markets don't like uncertainty. So that's the situation currently. Let's see what the upcoming week will bring to us. So these are the stocks. Just one more thing, just wanted to show you, which is NVIDIA. As you know, NVIDIA has been leading the markets and then dropping the markets as well. You could see here, we've been making clearly lower lows and lower highs on NVIDIA. On Friday, we hit the low of 107.49, then recovered a little bit and closed at 112.69. Clearly, there's a strong downside pressure in equity markets, and let's see how the upcoming week will play for the markets. Now let's go through commodities, and we'll go through the leaders and the losers. We'll start with natural gas. As you could see here, it's been a strong week. We came breaking the previous resistance here, it looks like it. On the daily chart, we have double top here on 445, right? It was a strong beginning of the week. Monday, huge move. Tuesday, Wednesday, Thursday, we had a little bit of a correction, and Friday back to the upside. So natural gas up 14.8% almost. Palladium doesn't show the chart so big here, but it looks like we're trying to recover here in palladium. Silver 4.5% higher. Strong week for silver, right off the 50-day moving average here, and we are holding. This is a strong sign. After a strong move to the upside, we're holding at the top of that range. Let's see how this week will play for silver. Coffee up almost 4%. We had a strong beginning of the move and then correction, so it looks like we give away about half of that move. Still up for the week, 3.95%. Copper, as we said, it's been strong. It closed on the high of the week. Strong Monday, more on Tuesday, a little correction here on Wednesday and Thursday, and Friday continuation here. Copper looks strong. Platinum, after the previous 2 weeks of selling, we had the upside move this upcoming week. The whole week we've been going higher, and Friday we give away a little bit and closing right below 200 moving average here on platinum. And of course, cocoa. We've been talking about cocoa in the past a lot. Just want to show it for new people. This progress in cocoa was a huge move that peaked first in April of last year. Then we were sliding lower to 7,000 from almost 12. Then we had another boost to all-time highs, almost 13, I think. Yeah, 12,909. And since then, we've been sliding lower. So for copper, it wasn't such a great week. Sorry, for cocoa, it wasn't such a great week. It's down 9.4%. Another loser is gasoline. I think this was a change of a contract, and we've been sliding pretty much the whole week, stopping right between 50 and 200 moving average here. Crude oil has been weak. We are below the previous support here. Friday we tried running and we came right back, still ended up with the green Friday, closing 67.05. It looks like it's on the production side. The OPEC is pumping more or saying they will pump more. Still, China is a lot of uncertainty there. The economy is not so great, even though we had a little bit of recovery. And so far, Middle East, things are a little bit cooler. So I'm just guessing here that might be affecting the crude oil in a negative way. So we have enough supply, and demand is still not picking up strongly. So that's crude oil. Sugar is the other one on the losing side. We've been sliding quite a lot. The week of last week of February was a strong drop, and this past week also negative for sugar. So those are the commodities. Let's just take a look at gold. See what gold is doing here. Positive week for gold on a daily chart. As you could see here, there's a consolidation. We're trying to find out what's next. Now, gold clearly has been playing safe haven here as the market is selling. Gold's been gaining momentum or regaining momentum here after the sell-off. So we started from the 2nd of March, this upside move, same time as the markets are selling here, the equity markets. So that's as far as commodities. Let's move to Forex and we'll go through all the winners and losers. So we start with euro dollar, clearly robust move to the upside from 104 to above 108 in 1 week. Super strong move to the upside. On the weekly chart, you could see how significant in that. We actually stopped right at the 200 weekly moving average right here and the previous resistance. So it's a strong move. The question is what's next? If we continue on euro dollar, we might be facing a strong resistance here. If we go into correcting, we're facing the 200 moving average first. Let's see what happens. So euro dollar up 4.4%. Pound as well, super strong, ending up closing above the 200 moving average. Similar story, if we choose to run further up, we might face resistance here, the level of November. And to the downside, I guess we might be retesting the 200 moving average here. Euro pound, also strong move. Euro clearly is the strongest currency, it shows. Clearly much stronger than pound. Huge move to the upside, closing above 200 moving average. And that's on euro pound. Australian and New Zealand dollar, they moved strongly as well. New Zealand dollar up 2% for the week. We're still not out of the woods. We had a huge slide here on New Zealand dollar. On the daily chart, we kind of are holding now into 100 moving average here. So if we choose to go higher, we would have to fight the resistance here around 157, 158. So that's on New Zealand dollar. Australian dollar, well, nice move. And then Thursday, Friday, we kind of stuck and went into correction here. Now on the downside, dollar Swiss had a nice drop here, stopping right on 200 moving average here. So the question is, what's this week? After a strong drop, we might see some kind of a correction. So we came now, we retested the support of December of last year, and we stopped right on 200 moving average here. Dollar yen dropped, and we did drop below the previous support here. We're trading currently below all moving averages here. Yen is strong, dollar's weak, so with that combination, we slowly were zigzagging, making lower lows and lower highs till we break that support of December, and that happened on Thursday and Friday. So that's on dollar yen. USD CAD, definitely should be watching. There's an interest rate decision from Canada. As we spoke a few times, we are still in this tight channel between 142 and 145. You could see here we are holding that 100 moving average. Friday with the recovery after 3 consecutive sessions to the downside. So USD is still holding against CAD. I guess hypothetically, if oil choose to run, we would probably see the increase in the Canadian dollar volume. But as of now, it's not happening. But let's see what happens this week with the interest rate decision from Canada. So again, USD CAD clearly trading in this tight channel here. Now let's take a look at yen against other currencies, as it became kind of a tradition. it looks like most of the currencies are still looking weak against the yen. Swiss had a little bit of pop here. Definitely Euro had a strong move. So if you were to put a title or give a title of a champion to a certain currency, definitely Euro was the champion for last week. So yen is still looking strong. Just to remind us, it's all about the interest rate, and everybody's watching what's been happening in Japan and what will be happening. And there's some expectation of further increase in interest rate. And the yen has been super, super strong. And let's take a look at Japan Nikkei. You could see Nikkei has been weak. Of course, it's being affected by global equities, but also by strong yen as well. Strong yen translates into weakness in the equity index, right? So that's on Japanese index, the Nikkei. We're trading below the previous support, and it's kind of showing or continuing showing the weakness. Okay, let's go into dessert. We'll take a look at cryptocurrencies. We're still struggling here. We were struggling against 100,000. Now it looks like the 90,000 became a new resistance here for Bitcoin. XRP is holding above 2. As we know, recently there was a decision of President Trump to create kind of a crypto holding for the US government. And XRP is one of those currencies. That was the decision right here. We had a huge move on the 2nd of March. And since then, the very next day, we erased about 70% of that move. Then we tried again, dropped again. But as of now, I think this candle that represented that move, it's our indication. So as long as we're sitting within that candle, it looks strong. If we break below, we might go retest 2 again. And obviously, if we break above 3, we might be looking for higher horizons. Okay, so that's as far as cryptocurrencies. That concludes our markets review. Please don't forget about social media channels. Subscribe if you're watching this on YouTube. Don't forget to click the likes. Write your comments, questions if you have any. We'll be happy to hear from you. And let's summarize in a few sentences what we spoke about. So it's all about Trump and tariffs, double T, right? TT, Trump tariffs. We have inflation data coming, CPI and PPI for this week. We have interest rate decision from Canada. We have a lot of uncertainty still there. We have on the 14th until midnight, possible government shutdown in US. So it's going to be a lot of fun. And what's good for us is volatility. You know, most of us are traders here trying to catch a momentum, and volatility is good for traders. We just have to be super cautious, calculate our risks, and have a plan. And that's what we're doing here. I want to wish everyone a good weekend. Happy Sunday. Enjoy it. Get some energy. Spend some quality time with your families. And prepare yourself for the upcoming week, which is going to be very excited. All the best. Take care.